What are the signs of a recession that we've been told is coming forever? What are the signs that the bull market rally we're in is going to continue? Could Congress actually default on the debt, which would be one of the stupidest things that you could possibly do in the history of the United States? What stocks have I been conservatively picking up along the way? Hang on. I am Dr. Stephen Fox. These are my personally selected stocks. This is not financial advice, as I do not know your personal situation. Hey everyone, I'm Stephen Fox. Welcome to my channel. What are some signs that we could possibly avoid a recession? One sign is that unemployment is at a historically low level at 3.4%. The VIX, a measure of volatility of the stock market, which is worse in bear market times. The higher the VIX, the more likely you're in a bear market. When it's above 20, you're going towards a bear market. When it's below 20, you're going towards a bull market. Right now, the VIX is sitting below 17. How low can it go? And then there are some disturbing facts that just do not resonate with the idea of recession. They're having a hard time getting enough pilots to fly planes for all the people that want to travel around the world.
Glenn, the numbers are incredible. The amount of travel that is happening is eye-watering. People want to get out. They want to continue to travel, increasingly to foreign destinations, and they are willing to pay for it. Why do you think demand is as strong as it is, given the high prices we're being asked to pay?
Well, thanks for having me. And I think the answer to that question is relatively easy. This terrible pandemic kept a lot of people from traveling at all, or certainly restricted their ability to travel. And people want to redo what they wanted to do all their lives, is travel. Mm-hmm. So now that people can travel, and people saved a lot of money during the pandemic, there were a lot of government support programs that enable people to build up their savings. Well, they want to spend those savings now, and they're spending it on what they want to do, which is travel.
So give us some perspective, though, Glenn. Are things as strong as they were, say, 3 months ago? Are there areas where you're seeing pockets of weakness or slowing?
Well, you know, it's hard to do year-over-year comparisons right now, because you look back and you see different parts of the world were recovering from the pandemic faster, and travel was picking up faster. So, for example, the U.S. was out of the gates first in terms of recovery. Europe was a little bit behind, and Asia was further behind. Now, everybody's out and done. So we're seeing Asia, as was just mentioned, really booming right now, because they were the last to start recovering. So they still have a lot of catch up to do, or so to speak. Europe, a little bit behind that. And then the U.S., even further, quote unquote, behind. But it's still robust. And we talked about April, still good.
Glenn, we've just seen the jobs report out of the United States. Unemployment 3.4%. Wages are ticking higher quite nicely. As long as we continue to see those kinds of numbers, will we continue to see the kinds of figures we're getting from the travel sector?
Well, I think overall, people like to travel, and that's one of the things people always want to do. And if you have money, you're going to spend it on travel.
As you will see, Expedia makes high use of artificial intelligence because of the shortage of labor and the high demand for travel.
Peter, the bookings numbers were just huge. I mean, they were up like 20%. What is your level of confidence that this kind of booking gain can continue?
Well, I think, as you heard before, there's tons of strength. You've heard it across the travel industry for demand. There's lots of reasons for it. We like to think that there's been sort of a structural change in how consumers are thinking about spending, and that travel is the top of the list, and it has proven that so far. Of course, last year this time, first quarter, there was Omicron, so there are some interesting things. We're still not that far out of COVID, so there's some interesting comps going on, but the travel demand is quite strong, and I think there's no real letting up of that. And as many have talked about, there are still things opening up that people couldn't do during COVID. I was recently in Tokyo for business, and it's the first cherry blossom season. that consumers have been able to go to from outside the country, and every hotel room was full in Tokyo. So, all of those factors are driving continued interest in ongoing travel.
Helpful context, and even Air Canada up here north with a pretty optimistic outlook today for travel activity. Does that mean for you as a big marketer, I mean, obviously you've been trying to figure out what digital ad budgets would be, that you feel confident about spending while people are traveling?
Yeah, I mean, we've certainly spent into the uptick in demand. We're spending a little differently than we used to pre-pandemic. We're much more interested in buying long-term customer value and the right kinds of customers who will come back, join our membership program, be valuable to us long-term. But we are definitely spending into that demand, and there's a lot of demand out there. So I think, in terms of travel, digital advertising, et cetera, that's been also very robust.
So Glenn Fogel was talking to me earlier, and he was saying that they're hiring tech workers, the guys that were laid off, because they're investing in AI. Are you competing with Glenn for workers right now?
I think we're well ahead of any of our competitors in terms of AI and machine learning and deployment of those two. We've been doing that for a while. We cut a lot during COVID, but we've been investing principally in the tech side of our business for the last couple of years. So we're in a good spot. We're continuing to hire. There's some great talent out there, but we're in a very good spot, and we're deploying more and more AI and ML into our products with the goal of personalizing the products as much as we can. So the customer experience is really great. But we've been doing that for years. It's in how we show you images, how we sort our homepage for you, how we give you filters and other things. So even in our service organization. So we're very invested in deploying AI and ML, and we've launched tons of new features for consumers in the last year, including flight tracking and smart shopping and all kinds of things. So we're all in on technology. We think that's, our superpower, and we power a lot of the travel industry beyond just our own brands in our B2B business through our technology.
The one thing that could throw us into a major recession, if not a depression, would be if Congress somehow stupidly refuses to raise the debt ceiling. They've already committed this money. It's like buying items at the store and then getting the credit card bill and refusing to pay it. That isn't the time to decide. The time to decide is before you buy the item, not after you've already incurred the debt. We've already incurred the debt. We have to pay it. The 14th Amendment says that Congress shall not stand in the way of paying the debt.
U.S. Treasury Secretary Janet Yellen says there are no good options for solving the debt limit stalemate other than Congress just lifting the cap. She spoke on ABC's This Week.
All I want to say is that it's Congress's job to do this. If they fail to do it, we will have an economic and financial catastrophe that will be of our own making. And there is no action that President Biden and the U.S. Treasury can take to prevent that catastrophe.
Very interesting thoughts there from Janet Yellen. Let's get more on this from Bloomberg's Bruce Einhorn. Bruce, give us your thoughts on what we just heard there from Janet Yellen, because this is in the context of some people suggesting maybe this isn't all down to Congress. Maybe there is the 14th Amendment can be called upon here to allow President Biden to just keep issuing debt. But there, Janet Yellen seems to be pushing back on the idea that President Biden can do anything himself and suggesting this is all in the hands of Congress.
So, Anna, you're right. So what Secretary Yellen was saying, she kept deflecting when it came to whether or not the 14th Amendment could come into play, saying there just needs to be a clean lifting of the debt ceiling. However, very significantly, President Biden, in an interview with MSNBC on Friday, did not close the door on using the 14th Amendment. He said that I've not gotten there yet. The word yet, of course, is doing a lot of work in that sentence. So just a reminder, the 14th Amendment here, this is something passed, approved for the Constitution back in the 1860s, post-Civil War. And it said that the public debt of the United States shall not be questioned. And so some people say that the wording of that amendment says that the president has the ability to say Congress, by not lifting the debt ceiling, is not following the Constitution, and so therefore the president can just ignore Congress and continue issuing debt. Has never been tested, obviously, and so if the president were to try to do that, certainly there would be a lot of uncertainty about whether it would stick. So Secretary Yellen is saying clearly we'd much rather just have a clean lifting of the debt ceiling.
So what I think is going on is that the federal government is massively stimulating the economy all the time. It started in an intense way with the health problems when they were dishing out money like there was no tomorrow, and the stock market went up like there was no tomorrow. And then the tax breaks occurred, and that's a major influx of cash for the economy to use. And then the infrastructure bill, the semiconductor manufacturing bill, and then the war in Ukraine, where we're supplying billions of dollars of equipment for Ukraine to defend itself. This is all real money, of course, and it's a very stimulative effect. Not to mention that the Federal Reserve has been stimulating the economy indirectly by saving these banks with their bank term funding program and their discount window. That has a marginal stimulative effect because it's like $300 billion. And so the Fed is trying to scoop up the money that's been dished out since 2008 that intensified during our health problems, and then with these new government bills, and then with the massive budget that's being proposed. It probably would be good to tone it down somewhat, but they must pass that debt ceiling above all else. Short of the politics, short of everything else, it's just mandatory that they pass that, or it will be catastrophic for the United States, is my thinking. One of my favorite stocks, if not my favorite stocks, is Super Microcomputer, whose symbol is SMCI. And they do high performance server and storage solutions for computers. They're a computer equipment maker and computer maker. So they have been doing very well. Their price right now is around 137. In this article in Real Money by Bruce Kamich, he does a detailed technical analysis, and he concludes that its long-range price is about $238, which is more than $100 above where it is now. And in any case, he says in his mind, it's for sure over $200. So there's good things ahead for this stock, and I will continue to own it. Please smash the like button if any of this has been helpful, because it really helps the channel. On Semiconductor, whose symbol is ON, is a favorite of mine. I've followed it for years, and I've owned it off and on over those 5 years, depending upon the circumstances. That's how I like to trade. I like to follow the same companies. I time them to an extent, but I'm a long-term investor to the extent that I always return to them, and I usually benefit from the trades. So it works out well for me. But on Semiconductor, they make the semiconductor chips that are the new oil of the new age. You were making too much noise back there, little boy. My cat. They make this semiconductors, which are the new oil for the new age, and their market capitalization is about 34 billion. Their price to earnings, their forward price to earnings is about 17. Their earnings growth rate is 25%. And looking at the chart, I'm showing you the 5-year chart just to kind of show you what a no worry sort of corporation it is. It's had nice steady growth for the last 3 or 4 years, and I predict it's going to continue. It's just a very solid company, and I've always liked I've never worried about this stock. I mean, I would maybe trade in and out of it depending upon what catastrophe we're dealing with at the moment, but I always get back into it. So it's a long-term trade of mine, and I have benefited greatly from it. And on the chart, you can see that on its price is around 80, and its 20-day moving average is 75. The Bollinger Bands you see around the blue line, which is the price line, that's the 95% probability of where the price will be, and it's at the upper range of that, but it's not oversold or overbought. Its relative strength is 57, which is right in the middle. So it's a relatively stable stock with a nice upward course. So I think things are going to turn out all right. You hear all these doomsayers over YouTube, and it's getting to be an incredible flock. And when you get everybody on one side like that, the stock market just loves to take advantage of that and do just the opposite, because there's short sellers waiting on one side and there's bullish people waiting to buy the bottom on the other side. So usually if it gets too extreme one way, it goes the other way. And I can't help but think what we're having is a reaction to all the negativity, to the point that I think there's a lot of people trading that have quit listening to the negativity and are going with the market. The market is acting like it wants to go up, and sometimes it will go up in spite of what rationally should happen. The old saying is that the market can stay irrational longer than you can remain solvent. So with that, thank you.